This content is provided for informational purposes only and should not be relied upon as legal, business, or tax advice. All opinions expressed are opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors. So this video is recorded Wednesday, March 17th, St. Patrick's Day 2021. Matt Bradbard here from RCM. My intention is to record these videos every few weeks or when relevant developments come from China. The goal is to provide more color and my perspective on how to access the Chinese marketplace. This is my fourth Enter the Dragon update. Each recording covers a few overarching topics, and I break this out into four different sections. Section number one, an update on RCM's China business. RCM's current relationships, we are providing market signals to 175 million RMB and have 10 strategies running through four different onshore groups. One strategy was shut down since my last post as the mandate expired after 1 year. We are in negotiations with existing China partners to turn on four strategies, three for existing signal providers and one for a new strategy that's been sim trading through RCM's desk for several months. Once secured, this should put aggregate AUM near 225 million RMB. RCM has also firmed up further collaboration with an existing China distribution partner as they are in the process of setting up a PFM fund and looking for RCM to assist with research and market signals. This is exciting as this new partnership could prove to be a low-cost solution for CTAs looking to get trading in China as we get clarification on the recent CSRC regulatory changes and also allow allocations from Western investors into those AMAC PFMs. So, section two, where is the volume and what markets are moving? From a China perspective, the two most active contracts with the highest volume, it comes as no surprise, is rebar and PTA. Looking at the performance in both the United States and China year to date, let me highlight a few of the markets. With talk of an impending commodity supercycle, most of the bullish markets on this side of the world and that side of the world is in energies. To date, the top performers in the United States, RBOB is up 46%. Both lean hogs and WTI crude oil have appreciated 33%, and Brent oil is up 31%. In China, the top year-to-date performers are crude oil and low sulfur fuel oil, both internationalized, two of the seven internationalized markets. And then you have PVC rounding out at 28% appreciation year to date. The laggards in China, not everything goes up. Apple and Coke are both down 19% year to date. I also want to make a note that RCM puts out a podcast once a week called The Derivative, interviewing thought leaders in the space, and we recently featured Jim Rogers, speaking of commodity super cycles. Give them a listen, and I will add a link in the notes here when I post this. The third section, I talk about any new developments. RCM believes we have found a path forward for non-US persons and non-US entities to trade the seven internationalized markets. We have vetted several custodians and have narrowed our search down to two FCMs that we think could fit our clients' needs. We hope to have those relationships in place potentially as early as April. We are also being told that our desk and OMS can support execution with those relationships, and that should allow connectivity through TT and CQG. Reach out for more clarification. Again, as a reminder, those seven internationalized markets are PTA, iron ore, crude oil, low sulfur fuel oil, rubber, copper, and palm oil. So what's new in China? On January 26, Chinese regulators approved the establishment of the Guangzhou Futures Exchange, making it the 5th futures exchange in China. And in recent weeks, China's 14th five-year plan, there was a meeting and some notes came out. Effectively, it maps out a blueprint for China's journey forward. In terms of economic goals, the party emphasized a switch from high speed to high quality development, stressing the medium-term goal of economic structure optimization for better quality and efficiency. Translation, their financial marketplace is becoming more westernized, and I see the market opening up more, improved access, and RCM is positioned to take advantage of these changes. The fourth section, I break down what does the future hold and how is RCM trying to add value in China. Big picture remains the same. Two-way flow, east to west and west to east for both investors and traders. What has changed since my last post is RCM is in final stages of inking a deal with a JV partner and their existing Cayman SPC structure. This collaboration should allow RCM to open individual SPs and to bring capital to China to trade Chinese futures. The offering initially will start with the 7 internationalized markets, but it's our intention to be able to plug and play when we get more clarification on QFI markets from the CSRC. Assuming this process is smooth for the first SP, they have verbally agreed to start with $10 million USD, and the goal is to be trading in May. I expect this business line to add an additional 50 to 100 million of AUM in the coming quarters for RCM. This could come from RCM's global investor network, larger CTAs that wish to self-seed, or have existing investors that want that CTA to provide more alpha via the Chinese futures markets. After all, have you not heard that we may be on the verge of a commodity super cycle? Wrapping up, please get in touch if you have any questions, if you'd like to get more information, or you have any specific topics on China that you would like to be covered in future episodes. Thank you.